New traders often make some very similar mistakes, and our guest today is Pratik Patel to talk about those and how to avoid them. So Pratik, talk about some of the common mistakes that new traders make.
I feel like one mistake that a lot of new traders make is a lack of education, lack of research, and lack of discipline. It's a very exciting thing to get into trading stocks, options, forex, or commodities, and you see a lot of hype about it, but I feel like people don't take the proper time to actually study the material and actually study what they want to do. So people will just open up an account, start trading not knowing what to do. It's just like any job. You have to train yourself. You have to open up the material. You have to go through all your research and find out what you want to do first before you get into it. Before clicking a buy order, sell order, I feel like you need to do the research, and that's one thing that new traders lack. They get too excited. They just want to jump into it right away without actually taking the time to study the markets.
Now, there are a lot of courses out there and a lot of ways to learn how to trade. One of the questions I hear is, how do I know who to trust, or who should I go to? I mean, can you give which question should I be asking if I'm a new trader about any service I want to sign up for?
One thing you want to ask, how long have they been in the industry? Also ask what their track record, see what their performance is over the year. Also, there's some common questions that every trader should ask if they want to look for a service, and the way they answer it sometimes can give you an idea of if they really know the market or they're just trying to sell your product to get into the market. A lot of times you'll see products sold by former traders who are just selling a product now and not trading. And there's also some products out there that provide live services along with trading. So you want to do some research also. Look for references, do a lot of Google search, search the web, call up people, call a broker. A lot of brokerage firms now offer educational services. So ask them what they prefer would be a good way for maybe a new trader, seasonal trader, or part-time trader, and they can also guide you in the right direction.
I hear a lot about paper trading and not risking real money right away. How long should I paper trade before I really put real money in the market?
Well, paper trading is a very good tool for a new trader. One thing about paper trading I feel a lot of people take advantage of is the fact that it's fake money. So they feel like if they make one bad trade, they're like, okay, well, I didn't really mean to do that. Let me reset my account and start all over again. One advice I can give with people who want to paper trade is treat it like real money. I know it's hard to actually treat fake money as real money, but try to do it. I mean, see how you do over a month. And even if you make mistakes, that's part of the business. Traders will lose and traders will make money. It's more about managing those losses and making them small. So take a paper trading account, do it for like a month, 2 months, 3 months, and see how your performances are. And don't be afraid if you make a mistake or lose on a trade, because that's part of it. And learn from those mistakes. Make a log, a journal log of I did this trade, entered A, exited B, if I made money or lost money, and then also notate your emotions or rationale behind those trades that you're making. So you have that journal, so you can always go back and look at your past performances, and this is how I felt, this is what I was doing to guide you forward in trading with real money.
All right, and then finally, how much money should I get started with? I hear that I can start with $25 in an FX mini account, but that doesn't seem realistic, and yet maybe they don't want to start with $100,000. What's a good balance?
That's right. Well, I mean, personally, for a new trader, I would start with $5,000 to $10,000. A lot of brokers will offer you accounts with like $2,500, $1,000, but you don't want to trade so thin. So if you make one bad mistake, there goes the entire account. So $5,000 is a good starting point, and if you make a couple of mistakes, you can still get back in the market. And also with that, trade according to size. You get a lot of these day trade margins where they give you 10 to 1, 5 to 1, margin. Trade according to the actual margin requirements. So let's say if you're trading soybean, for example, initial margins $3,500, depending on your broker. Trade only one lot. Day trade margins are maybe $500. Don't leverage yourself out. Because if you make that one mistake, there goes the entire account. But if you make one mistake on one lot, you can get back into the business and get back into trading day in and day out.
Pratik, thanks for your time.
Thank you.
You're watching the MoneyShow.com video network.